The Canadian banking system is at a high risk right now. Globally, the waters seem rather calm, with US performance seeming to be improving and the stock market giving hope to the rest of the world that better times are ahead. Look just to the north, however, and the picture shows that these waters are quite murky. Canada is completely rotten, and with just a little push, the entire financial and housing sectors could be eviscerated at a rapid pace. You came here for the truth. Today we are going to look at bombshell news. I'm going to bring you this hard-hitting fact showing you how really weak the financial sector, and by extension the housing sector, is in Canada. Let's begin with a little bit of introductory information just before I start into the deep, hard-hitting analysis. I need to introduce it first, so hang in there. I know the font is really small, but I just covered just a couple points. Here we go. We're looking at the BIZ, okay? This is the BIZ, their own report. And this is the Bank for International Settlements, sometimes referred to as the central bank of central banks. So in this report, they suggested under more stressed conditions, a 250 basis point increase in rates, which is not far-fetched at all, and assuming 100% pass-through, the numbers point to potential risks in Canada. And there's more to it. But essentially what they're saying is with as little as a 250 basis point increase, Canada is one country that they're pointing to. We've heard some of this information before, that there are risks, that there are cracks which have appeared. But I'll show you why Canada's banking system is underratedly risky. But I'll show you the facts. Let's get into this. One more thing. This is an article out of the Huffington Post from a few years ago talking about Zero Hedge, of all things, and how silly they're making it seem. Since the financial crisis of 2008, Canada's banks have become the darlings of the financial world, lauded by experts and observers for weathering the global storm. Not true. Arguably better than banks anywhere else in the world. I say this isn't true because we know specifically during the audit of the Federal Reserve that the Canadian banks did, in fact, it's proof. Bloomberg actually got the reports. It said that all the major banks in Canada received a bailout from not the Bank of Canada, but the Central Bank of the United States, the Federal Reserve. And then basically says that according to Zero Hedge, the Canadian banks face potential catastrophe. There is one place that has been very much insulated from the whipping of the market, and one place where banks are potentially in just as bad shape as anywhere else in Europe, and that place is Canada. Saying that, and this is important, tangible common equity ratio, a measure of the bank's ability to absorb losses, is at a very critical stage, and that was a few years ago. Major banks have a TCE ratio of below 4%, meaning the banks could be insolvent if their assets lose more than 4% of their value. 4%. Think about that. That means, let's just say, argument's sake, 4% of the people go in to pull their money out. That's it. Now, the total assets are a lot more than just the depositors, but I'm just trying to make a point. 4% isn't much at all. That's why bank runs are very frightening to any bank or the whole establishment. They get real scared real quick, and that's why they shut the doors. That's why they implement capital controls. How many times does this have to happen in all these different countries before people start freaking out? Here it is. Big news. This is bombshell news number one. When you look around the world and you look at the financial sectors, you tend to look at the United States and say, look how much debt they have. Or you look at Europe and say, look at the debt ratios that they have. Nobody ever looks to Canada and says, look how bad the scenario has become. And in fact, on this channel, you'll hear it every single time I could find a piece of information. I have a lot of Canadian friends out there listening right now who they know the truth. They know how bad it is, and they say, please give us more information. Here it is. Let's get into it. Canada, right here. There are 4 factors which the biz looked at, okay? Very important. Credit to GDP gap, property price gap, the debt service ratio, also known as DSR. DSR if interest rates rise by 250 basis points. Okay? On 3 of the 4 factors, Canada is in this critical category. 3 of 4. And it's closing in on the 4th. When you compare that to other regions, whether that's Italy, whether you're looking at Spain, anything, you'll see that they're not in this critical. I mean, this is just one example. Of course, you're looking at 4 different indicators and not as the whole big picture. But in these 4 indicators, Canada has a very, very high risk scenario approaching. You look at the prices of property at this time. You look at the amount of debt that people are taking on, household debt, versus their income. Then you look at the income that people make versus the ratio versus the cost of housing. Then you look at the rental prices, also very high. You have to factor in that starting wages, people coming out of school, their beginning wages are declining as the years go on. You're also finding that there are less manufacturing jobs, less high-paying jobs, and more service-oriented jobs that are in fact lower paying. You add that into increased expenditures from food and from electricity. You have to realize all of this stuff is piling up. Debt is piling up on a national level, provincial/state level, depending on where you're seeing this. And then we see something like this. When the Canadian banks needed a bailout, or maybe they didn't need it, maybe it was all part of a more sinister plan, getting a bailout from the Federal Reserve. And there's no possible resolution because if individuals start catching on, 4% of the assets disappear, the banks collapse. Can they withstand a bank run, even a moderate one? No, absolutely not. They'll shut the doors, they'll call a bank holiday, they will revalue the currency, they will bail in people's accounts, and this is what I worry about. The bail-in regime, I specifically read it to you in both the 2013 report out of Canada and the 2016 as well. Then you go to Brisbane, Australia, 2014, if my memory serves me correctly, where the G20 met there. And they said, we will implement a global bail-in policy. And then all the countries had to go back to their own and start to make the laws, implement these regulations and laws and everything else that put in place to say we're not going to do any more bailouts, but in fact we will do bail-ins. And surely bondholders may take a hit, but at the same time individual depositors will have to take a hit as well. This is what worries me. When you see 3 factors being very high risk, you have the laws put into place, a bail-in regime. You have the example of it taking place in Cyprus. Then you have Greece, for example, where individuals were locked out of their accounts for a period of time. Then they can only get little pieces at a time. you're brewing the perfect storm. So I'm very concerned right now for the Canadian banking system. Have you ever heard of me talk about that before? It's not just the US, it's not just Europe, but we are experiencing this globally. Let's look at Canada today, though. Then we get into the news that I have been hinting at, that I've been talking about over the years. Now I have a perfect example that I will be referencing for the foreseeable future. This is criminal, this is corrupt, and this is exactly why you don't trust anybody. You don't trust particularly the banking system. We are talking about what was done, TD Bank specifically, that were committing illegal acts, and they are now caught red-handed. 3 TD Bank Group employees are speaking out about what they say is incredible pressure to squeeze profits from customers by signing them up for products and services they don't need. On one level, it sounds bad, but it sounds small. It sounds like a small-time thing, all right? Well, it was found out CBC has this program called Go Public, and there are many individuals speaking up against what has happened. The longtime employees say their jobs have become similar to that of a stereotypical used car salesman. They're trying to upsell, they're trying to increase revenue, corporate profits, always. So let's get to this. They're trying to meet these unrealistic quarterly goals. Quarterly always, because the same with the corporate profits, right? They need to show that to impress the shareholders. Look, we're doing good. Don't worry about it. But it's been intensified because of low interest rates. And banks, it's saying this right here. The profits have dropped, and banks became required after the 2008 financial crisis to keep more capital on hand to protect against the downturn in the market. Yeah, you can't go out and gamble with all that money. You got to keep a few dollars in your vault. I'm sorry. A few dollars. I'm in survival mode right now. This person's saying they've been there for 15 years. And this is what it comes down to. Something that I talked about in my first book. Because it's the choice between keeping my job and feeding my family. Or doing what's right for the customer. So think about that. The ethical thing here, obviously. And then you have to, become realistic for a moment. If a person wants their job, if a person wants to make more money, they are going to sell the products and services which get them more money, that they're following a line, that they're doing everything according to what they're being told. And that's just the way it is. If a financial advisor knows that he's going to get paid more for putting you in a particular fund versus another fund, even though that fund he believes may perform better, he's going to do what he has to do for his family. And to some degree, most people would do the same thing. But this isn't the way that you as the customer would like to have that be the way things are. That's one of the big reasons why I wrote my first book and why I put emphasis on that in my first book, specifically because people are uneducated. So they go to the banking system and they say, look, financial advisor, please help me with my money. Well, that's got to stop. Those days have to be over. Then we get deeper. Financial advisors also admit deceit. So it's not just these 3 disgruntled employees going and starting to tattletale on their bosses. That's not what this is. TD employees tell Go Public the pressure to deceive customers extends beyond the frontline staff to workers handling wealth management. We do it because our jobs are at stake. That's one financial advisor in Ontario. Of course, they wanted to remain anonymous. She admits she acted in her, check this out, look at this, in her own interest rather than that of the clients after being put on a performance improvement plan. And basically that says, if you don't do better, you get fired. This is what they do so that they can fire people in a longer term scenario, and they don't have to, pay any severance or anything like this, because they can say, we tried to help the person, we tried to do what we had to, we gave them a year, they didn't improve, we fired them. It's ultimately a way that they can save a few bucks. I have invested client savings into funds. Now, before I get into this is what I have said since my very first videos. I've talked about this specifically, and then I even mentioned it in the book. I have invested client savings into funds which were not suitable because of the sales revenue pressure. That's very difficult to admit. I don't do this lightly. I was forced to lie to customers. This is bombshell news. This is huge. This isn't some hearsay. These are individuals coming out and speaking up against the policies of the banks. This isn't me doing an analysis on that. I'm reading you the information from these people. This is what has been going on for a long time. Look, it's no lie that those financial advisors receive benefits for selling certain funds versus others. That's a fact. Now, of course, you would expect that they would have your best interests in mind, but that isn't the case. Look at this. This is the proof that we need. We don't need these financial advisors. What we need is to take everything that we can. We need to learn it. We need to break it down. We need to analyze it, and we need to use what we have to then protect ourselves. Let's look at this from my new book. I believe this is so relevant. This is right near the end of the book where I say, first and foremost, take your savings out of the banks and put it into real assets. Once again, your money is used to fuel the banksters and their grip on the future of your savings. You have to understand, when you put your money into any one of these organizations, when you put it into the stock market, when you put it into financial instruments, whether that's your so-called guaranteed investments, your fixed income, your stocks, bonds, treasuries, you're investing in ETFs, you're investing in anything. You're supporting the system. Do what you want. Whatever it is that you desire, you should do that. I'm just saying the fact that these technocratic elite, that these globalists, they are using your own savings, your own wealth, as a means to strangle you, to try and bring you into poverty. You may see yourself as gaining, but ultimately every dollar you put in that system, you're fueling it, you're funding it, and it is designed to make you a slave. If you found this video informative, please give me a thumbs up. Remember that this is the bombshell news you don't get in the mainstream media. This mainstream media news will get pushed to the very, very back, and it will be forgotten. But this video will be remembered forever. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. So you can actually look through the book. Go over to Amazon, where they have a look inside feature that will allow you to flip through the pages of the book and see if you like it. Take care.